Hello! In this video, I'm going to be reviewing the Greater Houston housing market numbers for the prior week, March 25th through 31st, as well as looking at where mortgage rates are at currently and answering a common viewer question that I get. Hi, my name is Sharon Tzib and I'm with RE/MAX Universal, a licensed real estate agent and broker in the Greater Houston area. And on my channel, Houston Knows, my goal is to update you on our market weekly and take a look at where the numbers are at. Also, I like to answer any common questions that my viewers have, and so I'll be doing that this week in my Ask Me Anything section. Now, before we continue, if you wouldn't mind liking my video or subscribing to my channel, it certainly would help me get this content out to more people. Let's get started. So for the week of March 25th through 31st of 2025, HAR, our local MLS, released their numbers. This is a year-over-year look, so they are comparing that week of last year with that week of this year, okay? So a little lag here between the numbers and the video, but that's just how long it takes for HAR to get the numbers out and for me to get production going. But this was going to be an informative week of numbers because it's the last week of the month, and the last week of the month, typically in our area anyways, you will see an increase in closings generally, but that's not what we saw this last week of March. The last week of March, we continue to see an increase in new listings at 40.6% over this year to last. And we are going to continue to see more new listings coming on the market as we progress through the springtime. But the fact that it is so much higher this year than last year definitely leans more towards the buyer market that I'm seeing in most of the areas of Houston. So we will have to keep an eye on that number to see where that trend goes. Also, we saw that the buyers are definitely making offers as pendings went up a little bit, 3.4%. So buyers are out there making offers. Now sellers took their home off the market still at a higher rate this year than last, but not nearly as high as the week prior. That indicates that sellers still aren't happy with what they're seeing out in the market from buyers. There's still some sellers who are kind of stuck in the past and haven't come to the realization of what their house is probably actually worth versus what they want. Common problem. And therefore, we're seeing closings go down 9.9% this year over last. So that's telling me certainly that there is trouble with sellers and buyers having a meeting of the minds, and definitely have been seeing that. Definitely been seeing offers where the sellers just no way, no how will take that offer, and the buyers feel completely justified making it. So we will probably continue to see this throughout the year as our area definitely continues to struggle with affordability. And as our area has quite a bit of inventory currently, then you're going to see buyers very willing to move on. They're not going to mess around with the seller who doesn't want to negotiate, so they will just terminate their offer and move on. Or if they can't come to terms even before they go under contract, they'll just move on. So sellers are going to have to kind of come to terms with that. In terms of other buyer interest metrics, we saw showings did increase this year over last, so that's nice, up 9.7%. So they're definitely getting out there and looking at the homes. Listing views are high, and we had quite a number of open houses. So those are your numbers. So let's switch gears and go over to mortgage rates. Just my standard disclaimer that these are only as good as the day that they are pulled, and so I did pull them on April 3rd. I get these rates from Mortgage News Daily, so you can always check there yourself too if you're curious, because they are really kind of a moving target. But as of April the 3rd, the 30-year fix was at 6.63. That was down 0.12 from last week. And the FHA was also down 0.14 to 6.07%. So down is good. Nothing major, nothing drastic. Fed's still holding pat on interest rates, and the bond market, despite everything that's kind of going on out there in the world with tariffs and whatnot, the bond market has been kind of stable too, not overreacting. And mortgage rates have more to do with the bond market than they do actually with the Fed. So just so you know. Now, let's move on to my Ask Me Anything section. And in this section, it's going to be a real estate investor focused question. I like to kind of address questions from all segments of folks that I work with out there, buyers, sellers, or investors. And one common question I get from especially newbie investors, but I get it from seasoned landlords too. What is the biggest mistake you see real estate investors make? I actually see a lot of mistakes. I have over 20 years of investing. I sell a lot of investment property, so I work with a lot of investors. And it's hard to pick one, and we'll talk more about that in a minute. But if I had to pick one, I would probably say that it is that most investors, landlords do not have enough reserve. They don't have enough money to handle mechanical breakdowns, an act of God like a wind or hailstorm, or a vacancy when a tenant leaves. So my rule of thumb for my properties is personally I try to have about $5,000 per property set aside in reserves for these circumstances. Now, if you only have one rental, you're just starting out, that may seem like a lot of money. You may think, gosh, I had trouble just getting the down payment and the closing costs, and now I got to come up with another $5,000. But what you want to do in that circumstance is just set aside a little bit from your cash flow. Hopefully you have some cash flow. If you don't, then you probably shouldn't be buying an investment property if you don't have reserves set aside. If you're buying something that's barely cash flowing and you don't have reserves, I would just say it's not a good idea. You're setting yourself up for failure because these things do happen, and you don't want to be caught having a leaky roof from a storm and no way to fix it, and then your tenant's upset, they could leave, and now you have a vacancy. It just snowballs very quickly. So that is my advice on my Ask Me Anything, and you can do that in the comments. Just drop me questions and I'll try to get to it in my next video as soon as I can. Now, the last thing I have as a thank you for watching and getting this far is if you would like to go to my description, you'll see some free downloads, and the download for this week is kind of on theme, and it's a PDF that will show you the 8 mistakes landlords make. So as I said, there's more than just one I see, and I've made some of these myself. I am not perfect. We all make mistakes and learn. So feel free to download that. And if you have any questions on buying, selling, or investing in the greater Houston area, please feel free to call me or text me, and I'd be happy to talk to you about it. Thanks so much for watching, and I'll see you next week.